Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts in real estate leaders. Past guests include Devin Howland talking about economic development in Fayetteville, Yoni Schmidt of the Keyrenter team talking about property owners' frequently asked questions, and Kevin Evans of Liberty Air talking about HVAC systems and how they work and why they're so darn complicated. Today's episode is brought to you by Chris Lyle State Farm. Chris Lyle State Farm helps you protect your most precious assets and investments. Whether it's your home and auto, investment rental properties, or other valuables, call Chris Lyle State Farm for a quick and painless phone call to potentially save you double digits on all your insurance needs. Dial Lyle.com or call his office at 918-878-7771. Today's episode is also brought to you by Keyrenter Property Management. Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Tyler, you know as good as anybody, you've been in this industry a long time. It's hard to get contractors lined up so you can do make-readies in a reasonable amount of time. And if you don't have the scale to do it, it becomes even more difficult. Contractors are busy and work seems to drag on forever, and all that leads to lost rental income. But at Keyrenter, we line up our dedicated vendors so that unit turns can happen super quickly and we get more money back into the pockets of our owners. That's why no matter what rental you have, single-family homes, condos, townhomes, apartments, we've got the management solutions that you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. A huge shout out to Diane Higgins, who initially introduced us to the TB team, Tyler Bennett and his folks. We're grateful for Diane and for Dick for having introduced us. And let me do a quick bio of Tyler. Tyler Bennett has vast experience in real estate and lending. He currently holds a mortgage license, a real estate license, and an insurance license. Over the past 15 years, he successfully helped investment buyers purchase and rent over 6,000 single-family residences. That's 6,000. That is a huge number. It's well over $1 billion in value. He's personally active in many forms of real estate, including rentals, repositioning, developing, and the buying and selling of many types of assets. He specializes in entry-level single-family homes and identifies the top markets in the country for that strategy. Tyler's also a serial entrepreneur. He owns award-winning Amara Day Spa Salon and Boutique, which has several locations and employs over 115 people. He serves on the board of directors of a water company, enjoys being actively involved in securing clean, healthy water to the residents of the HOA. Tyler and Lee, his wife, live in Linden, Utah with their 5 children. I was just saying that that's aspirational for me, Tyler, because I've got 3 and I would love to have 5. At some point, it's
no
like
dull
economies
moments.
of scale.
Yeah, no dull moments. It
You have the older
keeps us
kids
busy and keeps us young.
Exactly. You have the older kids doing some diapers for the younger kids, trying to be helpful, though they're not always
100%.
helpful. Sometimes they pull off a diaper and drop it on the floor, drop the contents on the floor by accident. You can't really blame them because they were trying to be helpful. But anyways, Tyler, welcome to the show. Happy that you're here.
Thanks for having me, Matt. Yeah, pleasure to be here and looking forward to it.
Let's start at the beginning. What got you started in real estate?
That's a good question. So back in 2003, 2004, I was kind of going the finance track. I've always liked numbers, analytics, kind of investment banking or investing. And I have an older brother who is a general contractor and developer, and then some buddies that kind of got me over into the mortgage and real estate side of things. And the more I learned about it, the more I really enjoyed the investment side and the strategy side of understanding the numbers and then, ultimately what led to using real estate as a vehicle. An investment banker might use stock market or M&A business or whatever they're doing or they're specialized in. And so I really enjoyed kind of the game of real estate, but more importantly, how powerful, done right, how it can be a vehicle to improve people's financial lives.
So you started buying real estate for yourselves and then you transitioned into helping others buy single family residential units?
Yeah, 100%. And, at that time in 04, 05, I mean, I was early 20s and we were doing all kinds of real estate. And the reality is you couldn't go wrong, right? The market was exploding. Right. So we were doing fix and flips. We were doing some buy and holds. We were doing land development. We were doing spec homes. and everything went right until nothing went right. Basically, in 2008, the financial crisis, and we learned a lot through that, which ultimately led me to this kind of specializing in single families, because there was a small portion of my own portfolio, because I made a bunch of money and I gave it all back right when it crashed. And I saw the same thing with my clients, but a small chunk of my portfolio and my clients' portfolio survived. And it was these entry-level single-family homes. The value went down, but not nearly as much as some of the other asset classes inside of real estate. But more importantly, we still had customers. And in fact, demand increased because people were losing their homes, but they still needed a place to live. And so we were able to hold those homes and not have vacancies. In fact, rents went up in 08, 09 for us. And ultimately, that's what led me to developing the whole kind of niche and box that we work inside of with these entry-level single-family homes, because it's kind of this formula that works in up, down, and sideways markets.
Right. So can you account for the general increase in the total number of investors, or the feeling at least that there's an increase in the total number of investors, besides the proliferation of the internet and podcasts and kind of do-it-yourself stuff? I mean, did this market exist in the 80s and we were just too young to know, or didn't have family that was involved? Or is this just now like a new era where people that formerly put their money in the stock market are buying houses?
Yeah, I think it's a new era. One, just the ease of information, right? You've got all these gurus out there that claim to be real estate investors, whether they've done one property or hundreds of properties, but they're out there, people see them. And a lot of these gurus, whether it's podcast guys or guys doing live events or whatever it is, they're good at marketing and sales, and they create this vision of what people can create through real estate, and unfortunately there's a lot of models out there where they sell packages or fees for access, and then they teach them how to do it, but then the implementation part kind of fails, and so a lot of those students don't have a ton of success. But I think that's why it's so trendy, because it's so easy to get access to information. There's people out there claiming the best way to do it or how to do it, which I try to kind of take that model and flip it a little bit and say, well, plug into our system and we'll do the majority of the work for you. Yeah. Right. I don't want to teach you how to do it. I want to actually help you do it.
And so how to go into detail a little bit about how that works. So a client approaches you and says, I've got $50,000 or $100,000 of cash that I want to deploy, and I want to just buy real estate. What do you do then?
So the typical process is people, fortunately, my business has been built off of repeat customers and word of mouth referrals. So I'm not out there forward facing and trying to be this guru type of person. It's let me focus on our clients and let the product speak for itself. So if it performs, right? If we set realistic expectations, we hit or achieve those, then they're ultimately going to come back and continue to buy more houses and tell their friends and family about it. But so we kind of created, going back to 2009, 2010, this focus on buy and hold entry-level single-family homes. And the way I describe it is unsexy, vanilla, boring real estate that works, right? Especially when you look at it over an extended period of time, 5, 10, 15, 20 years. It's extremely powerful. The ROIs are phenomenal. But when you buy one house and you make $250 a month cash flow, month one, it doesn't feel life-changing in the moment, right? So you have to get educated on the impact that house has over a long period of time. But so we created this model where we know the type of product we want to target. And initially, I'm in Utah. That's kind of home base for me. And initially, we just brought the product to Utah. Like most real estate people, they do real estate in their own backyard. They're experts within a 60 or 100 mile radius, and that's what they do. And our customer base started expanding all over the country. And my mindset shifted to more almost like a financial advisor, right? There's not a financial advisor or someone who has assets under management that builds somebody's portfolios with companies that are headquartered within an hour or two drive, right, of where they're at.
Right.
The expectation is you understand the entire domestic, possibly international market, and then you build my portfolio based off my risk tolerance and time frame and goals and all that stuff. So I kind of decided to do mimic that model, but with real estate. I know exactly what type of real estate we're targeting. So I'm going to go identify the top markets in the country. One, I'm going to understand what's going on in the market, right? The macroeconomics
Sure.
of what's happening. And then I'm going to analyze each market and figure out for our specific strategy, what are the top markets in the entire country? And then I go, set up infrastructure in those markets. But ultimately, we give our clients access to those markets. We source and identify the top deals in those markets. And we have a lending leg, an insurance leg. Obviously, we partner with property managers like Keyrenter. And so we set up everything for them and help them build their own portfolio that they have 100% control over, but they can just plug into our system and get access to this type of product all over the country.
Beautiful. Bigger Pockets, I don't know if you saw this article, Bigger Pockets recently identified Oklahoma City as the top market for buying single-family residential properties. They did it based on a number of metrics, including population growth, rent-to-asset value, and a number of other things. When you think about top rental markets for investment for your clients, what other metrics are you using to figure out kind of where you're going to build that network and plug them in?
So first and foremost, it's always population. We want to be where people are headed to, not headed away from, right? And COVID's had a huge impact on this. People were already trending out of certain areas and into certain areas, and then COVID kind of put an exclamation point on that. And so first and foremost, we want to be where people are moving into. Obviously, with population growth, creates demand for housing, employment, infrastructure, like all of those indicators. But in addition to that, because if we stopped there, the reality is there's a lot of markets out west, Phoenix, Vegas, Salt Lake, where I am, Denver, Boise, that check a lot of those boxes. But after that, we get to now affordability, and then the rent to value ratios and what does that look like, and the amount of wages or income people are allocating towards housing. And that's why we're not in any of the markets out west right now,
right?
Because you can pay 200 grand less and get the same amount of rent in a market like Oklahoma or Arkansas. And your ROIs obviously are higher as a result of that.
Right.
But even just as important, the tenants are better qualified. What I mean by that is you could have a household income of $50,000, $60,000, $70,000, and they're allocating $1,600 a month to rent. That's healthy. That's a healthy ratio. The reality is they could get a mortgage if they wanted.
Yeah.
Where a lot of other markets across the country, people are spending a lot more of their money on housing, and so they have less discretionary, and it makes them less likely to pay on time and be responsible tenants. So
yeah, when you're building out the infrastructure to enter any, these markets, whether in out east or in the center of the country, what are you looking for in property management, and what do your best property managers do that your worst property managers don't do?
That's a good question. I was literally on stage last week at a conference, and somebody asked a very similar question. And I like to start the answer with, you can do everything right. You can buy the right house in the right market at the right price, in the right location, get the right financing on it. And if you have the wrong property managers, it can end up being a bad asset and a terrible experience for somebody, right? Because my clients, 99 point whatever percent of them have never even seen their houses, so there's a huge element of trust that they place in us to come through our system. And so we put a huge emphasis on the property management side of things. And so I would say the number one thing that we look for in property managers is communication. I think everybody that has owned real estate over time or used property managers. I think the most common complaint we get is they don't communicate very well, or they feel like, they're overcharging or they're just a number on a spreadsheet, right? Because if you're a mom and pop investor and you've got one or two houses and you're working with a decent sized property manager, you're not making up a big chunk of their business. So how can that property manager make them feel like their business is important, right? And I think that starts with communication, but then transparency. I like to tell our clients that, look, we go and we vet and we find property managers that are already established in that area. oftentimes we don't go for the very biggest guys, and we don't go for the mom and pop boutiques. The mom and pop boutiques, they're really nice and friendly and great to chat with, but they don't have redundancy. They don't have the ability to scale with us, because we're in some markets, we have over 1,000 houses with property managers.
Wow.
And so they've got to be able to grow with us and scale and be willing to hire and have the ability to train and do all of that. But it's the end of the day, it's good communication, being transparent, not overcharging or over repairing, and having kind of I view property managers more as partners, not we're outsourcing these services. Like we're in a partnership together. And if we have the same goal, which is having our clients, the investors, be as profitable as possible. And if we align there, then your actions are going to take care of themselves.
Right.
And knowing that the more profitable the investors are, the more likely, business will grow for everybody. I think that's really what it boils down to. And honestly, it's tough to find property managers that buy into that.
Right. I mean, 100%. The property management company has to understand that if they do a good job, they're going to grow and scale. But we oftentimes have vendors, HVAC plumbers, who are great, but they can't grow with us. They're not growth mindset oriented. They just want to go out and do 4 jobs a day and be done. And God forbid they, have a job that takes 2 weeks. They're not going to hire somebody that will help them or manage the books or the admin side of things. They're just going to fall behind and not tell anybody about it. So we get that challenge in a significant way. The other challenge is on the communication side, we train actively to avoid what we start to see sometimes, which is, Tyler, there's a plumbing backup at your house. What should I do? I'm like, no, not what should I do?
Yeah.
You're the expert. Why are you asking Tyler? And in this case, Tyler's an expert too, but why are you asking client 1, 2, or 3 what they should do? The email is, we've experienced this backup. We've tackled it the immediate need this way. We've got 3 options in terms of fixing it. One is a short-term, one's a medium-term, one's a long-term. I recommend we do this and not this because of X, Y, or Z reason. Do you agree? If I don't get a response from you in the next 5 days, 10 days, I'm going to move forward with this thing. Because property management is a necessary service, in my opinion, but the owner does not view us as the center of their universe. They're like on the beach in Mayakoba somewhere, and they get a message that their toilet's backing up at their rental property. They're like, delete, I'm on the beach. We need to be prepared with an investor mindset to fix that sort of stuff. But on that topic, you've built a bunch of organizations with amazing people over your career. You've built tremendous sales organizations, and the people that I've interacted with at TB Real Estate, they're sharp, they're responsive, and they've got, above all, I have to say, a compliment to you, a solid work ethic. And we are looking for the same thing in our people, but I want to know from your side, how do you think about talent management, hiring, and retaining A players in your organizations?
Yeah, that's a really good question. And honestly, it's probably one of the biggest challenges a business owner ever faces. And I have multiple organizations. If you're asking me that about my day spa and salon, we employ at any given time 100 to 140 people, but we have a ton of turnover. We hire 40 to 60 people a year, and it's exhausting. And that's just the nature of the type of, we employ, generally speaking, 18 to 30-year-old people that have a lot going on with life, and somebody has a baby or somebody gets into grad school, or, there's just a lot of turnover. On my real estate side, there's less turnover, but I would give you the same answer for both. And to me, it starts with, are they a fit for the culture? And what type of human being are they? And so I think that starts with, well, you got to know what your culture is. Who are you? What do you stand for? Whether you call that core values or whatever it is, it's just who are we, and what's our purpose here, and what are we trying to accomplish, and what type of people do we want to attract? And then you start looking at skill set and who's better. But I will take the right culture fit and the right attitude and train skill over somebody who has the skill set but isn't a right cultural fit all day long. Yeah. Because that's how you can retain, that's how you can get people. And I appreciate the compliments about my staff that you've worked with. And honestly, it's not anything that I'm doing. It's just getting the right people in, and they buy into it, and they naturally are just going to show up and perform.
Yeah. One challenge that we face is 24-hour, the property management's a 24-hour business. A house lights on fire or floods at 2 a.m. I need somebody to be on that. And we don't require them to clock in at 9 a.m. on Tuesday and clock out at 5 p.m. I don't really care. Yeah. So if somebody's up at 2 a.m. dealing with something and they come in late, or they're not there the next day because they're working from home, we don't really care. But there's a tenuous balance between working too much and working all the time, and being lazy or not addressing things that need to be done. And so that it's a tough cultural nuance to say we want people that work super hard. We want people that are hyper responsive for towards communication from tenants and from owners. And yet I want you to also have a family life and some time to relax on the weekends. Mm-hmm. I haven't figured out yet how to blend that, because I'm kind of always on. I'm always working, it seems. And, I might be with my family, but I also check my phone. And so if there's an emergency, I'm on it. And people think, well, Matt's always doing this, so I should also be doing this. And it's like, well, no, I want you to relax, because for the long-term tenure, if you're going to be here for a decade, you've got to be able to find some relaxation and go on vacation once in a while. But I found that to be a super difficult balance to strike, really.
It is. And right, you hear a lot about this whole work-life balance and all that. And the reality is, I don't think it really exists, especially in our world and in the world of entrepreneurs and all of that. We have a lot of flexibility with our time and our schedule, but because we do, it means we kind of always got to be plugged in at the same time. And so to me, most of that just comes down to time management and how you're prioritizing, what are you doing? And there's times where I shut everything off and I'm like, I'm focusing on my kids or my wife or my, whatever it is right now. And you got to leave the phone away. But then it also affords us the opportunity to be on the go and be able to work from wherever we are. So it's kind of, it's kind of a double-edged sword, right? With the technology world of how does that all work? And I think everyone's just got to kind of figure that out for themselves of how am I an efficient worker? How am I getting my work done? But I also don't feel like it's consuming my entire life, right?
Yeah,
but
the double-edged sword
it's a balancing act.
Double-edged sword is you can work from anywhere, therefore you work from everywhere. That's the challenge.
Yeah.
Let's switch to a second into the topic of how you speak to your clients about return on investment in the real estate segment. Sometimes I have conversations with our clients about depreciation, interest expense, and it just goes right over their head. Do you talk about cash on cash return, or do you give the full picture to your clients about the benefit of real estate?
Very good question. So I give the full picture, and this is how I typically teach it. I tell them that there's 4 profit centers inside of real estate. I usually draw a picture of a house, and I go 1, 2, 3, 4 in all the corners. And number 1, I say, is cash on cash ROI. Obviously, that's an easy definition of how much cash after all the expenses do you have, right? Compare times by 12. So it's an annual basis, divide it by the capital investment. Boom, there you go. Right now, we're targeting like 4 to 6, 7% in cash on cash ROI. 12 months ago, it was a little bit higher because interest rates were lower.
Yeah.
And so that adjusts as markets conditions adjust. Number 2 is depreciation. And I like to explain depreciation. I usually explain it like this to try to make it as easy as possible. And I use a $275,000 house because you divide it by 27 and a half years, which gives you $10,000 of depreciation a year. And if you have positive cash flow of $3,000 to $6,000 a year, plus you have principal reduction, which is number 3, of about the same amount, the reality is that the depreciation should cancel out the majority, if not all, of the taxable income that you would have from operation standpoint, which means you get 100% of your capital to work with or reinvest or whatever you want to do with it, right? So number 1 is the cash on cash ROI. Depreciation, which I usually show depreciation as an ROI. So the savings, it typically represents about a 2 to 3% ROI. Mm-hmm. And then you have the principal reduction, which is if you get a mortgage, right, you're paying down principal. I call that deferred cash flow because it's cash flow. You just don't get it today, but you're guaranteed to get it when you sell it, right? So the combination of those three, I define as the internal rate of return. Right now, it's about, for our product and our system, is about 8 to 12%. So low double digits you're getting on an internal rate of return, and principal reduction, depreciation are guaranteed, right? Yep. You're getting those no matter what.
Yep.
Obviously, the cash flow is dependent upon market conditions,
yep.
but it's that internal rate of return is very predictable. Up, down, sideways markets, those rents on these types of houses very rarely, I mean, really have never gone down. Right. You know, they'll flatten a little bit. Maybe we're giving a little bit back right now due to the whole COVID madness because they went up so fast. But rarely, you know, worst case, they soften just a little bit, right? Or correct. So that's very predictable. The fourth profit center is appreciation. Obviously, where the majority of wealth is created inside of real estate. And this is where just time in the market is so much more valuable than just timing the market. The more real estate you can own over an extended period of time, the more profit you're going to have in the end. And then I show all those together as like a total, you know, potential ROI. So yeah, that's usually how I explain it. Depreciation can be complicated, but I try to, you know, dumb it down as well as I can, so that people kind of get the idea of how it works.
What do you say to your clients that are fully invested, all their wealth is tied up in the stock market, and they look at this and they go, well, okay, historically over 100 years, the stock market will return 12%. You're telling me 8 to 12% plus I get appreciation. That sounds like nice upside. How do you explain to them the benefit of being in real estate vis-a-vis the stock market?
Good question. So, you know, that 8 to 12% return I was talking about, plus you add in appreciation. And if I use somewhere in the 4 to 6%, you know, range, and I fast forward 5 to 10 years, typically the total return is 25% plus. And so whenever we underwrite homes, we're looking for 25% plus as kind of our bottom number to approve a house through our system.
Right.
That's assuming leverage, right? Putting 25% down. Obviously, if you pay cash for a house, then it's a lower number because you don't have the leverage component. So I talk to a lot of people about reallocating their assets. Oftentimes, majority of the time, a lot of their assets are in the stock market. And so, you know, I have the typical pros and cons of, well, inside of real estate, it's a tangible asset. You get cash flow along the way. You don't get cash flow in the stock market. You really, you know, you only realize it if you sell it. You get control, all these benefits to pro real estate. It is typically where I go, but oftentimes I'm showing them they could get 2 to 3 times the return, but without the exposure, right? Because it's always this risk reward. Yeah. You invest in the stock market, you're hoping to get 8 to 12% over an extended period of time. And you could have periods of time where you're down 20%. I mean, look at everybody's portfolio in 2022, right? Got hammered. And in my strategy of real estate, you're never really down, right? That internal rate of return of high single digits, low double digits it's not guaranteed because nothing's guaranteed, but principal reduction and depreciation are, and that we're going to be able to find customers for these houses. We always have been able to. And so you don't have as much exposure, yet you have even more upside. And so I think that's what attracts people to reallocate from the stock market into real estate is the protection element, plus then the upside and the cash flow along the way.
Right. You mentioned earlier that your clients are largely outside of Utah. What portion of your clients, let's talk 2 years or 3 years after you started your business and then now, what portion were outside of Utah then and now?
Oh, so when we first started, it was all Utah. And then it started growing out. So probably 2 to 3 years in, I bet we were 80% Utah, 20% out. Yeah. I bet today it's probably exact opposite. You know, maybe 25% kind of here in our home market, 75% outside of the state.
And how do people generally find you?
100% referral based.
Wow.
Yep. And I go around and speak. I go speak to a lot of different companies, sales organizations, business owners that, you know, I think step one for a lot of business owners, especially who run sales organizations and stuff like that, is let me teach these guys how to make money. And now step two is now I want to teach them how to be smart with their money
Mm-hmm.
and preserve it. And so I go and speak a lot to organizations like that, whether it's groups of, 20 or 200 people at President's Club things or stuff like that. But those are the way I get invited to all those is because somebody there is one of my customers, and they're telling somebody about it.
Did you know, if you look back at yourself as a kid, did you know that you were going to be an entrepreneur? Do you have early hints or signs?
That's a good question. I would say kind of. I don't come from an entrepreneurship family. I grew up very, very, very humble conditions, very much paycheck to paycheck and, negative for the most part. And so I always had to work for everything I had. And so at a young age, right, 12, 13, 14, I had my lawn mowing businesses and all that type of stuff. So I kind of had to figure it out. So I think I was forced to have the hard work ethic and the how am I going to go make money because I'm not even old enough to go get a real job, right? Situation. I think it benefited me greatly, to tell you the truth.
Yeah. Funny, are you a member of EO, Entrepreneur Organization, by chance? I don't know if you guys have a chapter.
I'm not, but I'm very familiar with it. Mm-hmm.
So there's a person in my forum that was saying that their child was getting in trouble at school, and ultimately they were suspended at school. And we dug in a little bit and we said, what happened? Well, it turns out the child was the kind of straw that broke the camel's back was that the child was in the teacher's lounge, like using the soda machine or sitting there drinking a soda or something like that. And our forum mate was devastated by this and, what it means for parenting and whatever else. And I was like, God, that sounds like an entrepreneur in the making. Like, doesn't accept
figure
rules.
Something out.
Like figures out how to get a soda when they want a soda. I mean, this is like really just get this person a lawnmower and let them go cut some grass or something,
It's funny, like to build on that, one of my big goals with all my kids is to, one, teach them kind of that entrepreneurial spirit, but then to give them some seed capital to start a business, and help them just make a run at it, whether it works or not or anything, but just to have the opportunity, right, to be able to do something like that. How do you
encourage that entrepreneurship in your kids?
Yeah, it's tough because I feel like my kids' friends pay attention and are way more curious as to what I do and how I do it than my own freaking kids are, and I think every parent probably feels the same. But honestly, I just focus on example. I think our kids, my oldest is a junior in high school and I have a sophomore in high school. So they're getting older, but I think they're smarter than we realize and they observe a lot more than they probably, allude to. And so that's my main focus right now. But then also, figuring out this balance because they're growing up very different than me, a lot more privileged. I've been fortunate to have a lot of success, but how do you not screw them up along the way?
Yeah.
And so how do you teach them how to work hard and, do all these things? And so I don't know, it's a work in progress, but we're constantly trying to figure that out with them.
I mean, for my kids, I'm always, if they take their clothes off and put them on the ground instead of throwing them in the hamper, I'm, harping on them for stuff like that. They've got to throw their trash in the bin and whatever else. But it's hard when you're, going on family vacation and showing them nice things in life to not let money breed laziness. It's hard. Hard.
Yep, it is.
Who are your colleagues that you have tremendous respect for in your industry?
Yeah. That's a good question, Matt. It's funny because I've built my business kind of in partnerships with people like you and Keyrenter. Not these big gurus that everybody knows, but people that are experts in their local markets that have built, good rapport and built good business. And those are the people that I respect so much more than the big names you hear on podcasts or, on social media and stuff like that. One of my biggest clients is a gentleman named Chris Crone. You may or may not have ever heard of him, but he's kind of more of those guru guys. I was speaking on his stage last week and we've done thousands of deals together. Wow. And he does it for the right reason. And I really enjoy that partnership where, he just outsources all real estate fulfillment, through my system.
Wow.
And And so, yeah, so I have some great, kind of partners and clients from that perspective of people that are just phenomenal at figuring out how to acquire clients and show them what we can help them accomplish.
Any last words of advice for anybody that's looking to get into real estate that hasn't yet made the leap, or somebody?
A couple things I like to say. If you like something, if you want something done right, don't do it yourself. And I think this is super applicable to even property management. So many people, come in the door and it's like, oh, I want to put on a tool belt. Yeah. And I'm like, no, I promise you, you don't. Like the best money you're going to spend is outsourcing some of that work to experts and professionals that can do it so much more efficiently than you can. So often people get hung up on, the fees or the this or the that, and they don't realize, the benefit that it's creating. And so one, be conscious of that. And number two, whether it's real estate as a vehicle or not, like I'm such a big believer in people. I kind of use this. I'll end with this. I talk a lot to this: create, manage, protect in order to grow. And I mean, Matt, you probably know someone who's figured out how to create money. Like they make good money, but they don't manage it well, right? Everybody who's listening to this, I guarantee you know somebody who makes decent wages and lives paycheck to paycheck, right? And oftentimes it's because we spend so much time figuring out how to make money and we spend very little time managing it. Yeah. And so now let's manage it better. And if we're able to manage it better, well, now let's go protect it. Let's invest it wisely. And that's ultimately how we grow wealth, right? And that's where I plug in real estate, and our whole strategy is we'll come in, we'll create the strategy, we'll identify the markets, we'll set up the proper management, right? Access to it, we'll help protect it and help you grow. And if people can buy into that vision of, being better rounded in all those areas and focusing on all that, man, if you figure out how to grow wealth, it just, it changes your life, and not from a material good standpoint. Like to me, this isn't about buying a nicer car, a bigger house or anything like that. It's creating time for people, right? Yeah. Is what I'm passionate about. And the more time people have, the more they can pursue their passions, the bigger impact they can make. And, real estate is just one of those vehicles, but done right, it can be life-changing, generational.
Money's freedom. I've been using your little model there, but I didn't realize what it was called. I try to squirrel as much real estate as possible into in my family, so that my wife doesn't have doesn't look at a bank account and see that it's full of money. And there's actually spending right? It's all over there. It's all in fixed assets. It's all in fixed assets. None of it's in cash.
Can't get access to
it. Tyler Bennett of Tyler Bennett Real Estate. He's got a vast amount of experience in real estate and lending. He has done all sorts of stuff in real estate, but he's successfully helped investment buyers purchase and rent over 6,000 single family residences worth over $1 billion in value. He's personally active in all sorts of real estate, including rentals, repositioning, developing, and the buying and selling of many types of assets. And he specializes in entry-level single family homes and identifies top markets in the country for this strategy. Tyler, we really appreciate you being on, and we appreciate our relationship.
Yeah, thanks, Matt. Thanks for having me. And we love working with you and your team at Keyrenter, and look forward to doing a lot more houses together.
Thank you. Take care.
All right. See ya.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.